Hey everyone, welcome to GoldPulse. With all the talk about a slowing economy, have you ever wondered what happens to your investments during a recession? Today, we're breaking down how markets react, from gold and Bitcoin to the US dollar, treasury yields, and major stock indices like the Nasdaq 100 and Dow Jones. We'll walk through 5 key steps. Keep an eye on the video to see how these numbers move. Let's dive in. The recession begins. It's May 1, 2025, and new economic data sends shockwaves through the markets. GDP growth is negative at -0.3%, inflation is flat with core PCE at 0.0%, and job openings drop to 7.192 million. Investors shift to risk-off mode. Gold rises 1 to 3%, from $3,200 back to $3,305 to $3,350 an ounce, as a safe haven asset. Bitcoin takes a hit, falling 3 to 5% from $94,000 to $89,300, $90,200, as risk assets sell off. The US dollar weakens, with the DXY dropping 0.5 to 1% from 99.3 to 98.30 to 98.80. 10-year Treasury yields dip from 4.17% to 4.07 to 4.12% as investors seek safety. Stocks also decline. The Nasdaq 100 falls 2 to 3% from 19,350 to 18,765 to 18,960, and the Dow Jones slips 1 to 2% from 42,200 to 41,350 to 41,775. The situation deteriorates. A few days later, more data confirms the slowdown. Non-farm payrolls come in below 135,000, and the ISM manufacturing PMI drops under 48, fueling recession fears. Gold climbs another 2 to 4% to $3,400, $3,450 as investors flock to safety. Bitcoin continues to slide, down 5 to 7% to $83,850, $85,600, reflecting the risk-off sentiment. The DXY falls 1 to 1.5% to 96.80 to 97.30 as the dollar weakens further. 10-year Treasury yields drop to 3.92 to 4.02% with increased demand for bonds. The Nasdaq 100 declines 3 to 5% to 17,825 to 18,260, and the Dow Jones falls 2 to 3% to 40,110 to 40,525, as the market braces for more uncertainty. Markets look for a lifeline. Over the next few weeks, investors start anticipating Federal Reserve action. Fed minutes and speeches hint at potential rate cuts, creating volatility as traders position themselves. Gold edges up 1 to 2% to $3,450, $3,555, supported by a weaker dollar but cautious as optimism grows. Bitcoin sees choppy trading, ranging from $82,650 to $89,880, as speculators bet on a recovery. The DXY slips to 95.80 to 96.30, and 10-year Treasury yields fall to 3.82 to 3.97% as rate cuts are priced in. Stocks begin to rebound. The Nasdaq 100 gains 1 to 3%, and the Dow Jones rises 0.5 to 1.5% too, as hope starts to build. The Fed steps in. A few weeks later, the Federal Reserve officially signals rate cuts or quantitative easing to tackle the slowdown. Risk appetite returns with a vengeance. Gold peaks but then dips 1 to 3% as some investors shift to riskier assets, though a weaker dollar provides support. Bitcoin rallies 10 to 20% to $91,915, $107,856, fueled by lower rates and speculative buying. The DXY weakens further to 94.85 to 95.35, and 10-year Treasury yields drop to 3.72 to 3.87%. The Nasdaq 100 jumps 5 to 7%, and the Dow Jones climbs 3 to 5%, as markets cheer the Fed's signal. The Fed takes action. The Fed follows through, cutting rates by 50 basis points or launching QE, injecting liquidity into the markets. Risk assets soar. Gold stabilizes or rises 2 to 3%, supported by a weaker dollar but capped by risk-on sentiment. Bitcoin surges 15 to 25% to $105,665, $134,820, as investors pile in. The DXY falls to 92.95 to 93.95, reflecting a weaker dollar. 10-year Treasury yields drop to 3.52 to 3.77% as K keeps yields low. The Nasdaq 100 rockets 7 to 10% to 20,220 to 22,175, and the Dow Jones rises 5 to 7% to 43,590 to 46,200, riding the wave of liquidity and optimism. And that's how a recession can unfold across the markets in 5 key steps. The big lesson? Safe havens like gold shine during a recession, but risk assets like Bitcoin and stocks can rally hard when the Fed steps in. Of course, unexpected events like geopolitical tensions could shake things up, so always stay informed. What do you think? Will Bitcoin hit $150,000 after the Fed's rate cuts, or will the Nasdaq 100 outperform it? Drop your thoughts in the comments, and if you found this breakdown helpful, hit that like button, subscribe, and ring the bell for more market insights. See you in the next video.